Hi and welcome to the final podcast of the year. Only 4 trading days this week, and then 2022 will be history. As usual, we will look at the markets and the week ahead of us, and of course get into the trading tips. And last week's trading tips, well, some of them went in green, but one went in red. Will we be able to make redemption this week with a strong close, as the 4 last days of every year are supposed to be good trading days? I don't know. We will try our very best. You are listening to the StockInvest.us Trading Tips podcast with Jim. And for some 20 minutes, we will do exactly what we do every week. See if we can understand the market and find some good stocks to trade. Welcome to the very last podcast of the year, which will be only a review and very short one. I'm out traveling, I do not have the camera, but anyway, the YouTube video will be made where you can see some of the things that I say, along with some other information. We will just quickly run through the markets, have a quick look at the chart, try to determine will the statistics, which says that the 5 last trading days of every year plus the very 2 first of a new trading year are green. Santa Claus rally, you can call it whatever you want. And these 7 days will determine how the next year will go. If they are very good, returning 4%, you can expect a very strong year in 2023. If they are very moderate, you can expect a bad year. I expect first half of 2023 to be very bad, and are putting more emphasis on the last part. I think there will be some extreme good buying opportunities. You just have to stay afloat. And for that, I only have one advice, which I've been giving over and over again. Try to have at least a good portion of your portfolio in stocks that can stand a hold. Lately, that has been oil stocks, and as you saw last week, Chevron, despite a very volatile week, Chevron held very good, even going into the green by the end of the week. And for next year, I think oil will continue to be one of these stocks, which will hold good if markets go very down. These will not fall as much and can work as a hedge. The other tip for stocks that may hold very good is, of course, anything related to war industry, as we've been speaking about in all these podcasts. Weapon industry will be strong for a very, very long time until we see a political shift, where we have politicians actually talking about peace and not war. And sadly, as I said, I think that the Taiwan conflict will come up very early in 2023, pushing the oil price very, very high, and also contribute to further falls in the market. Hopefully I'm wrong about that, but we see some more aggression around Taiwan as we speak. The other type of stocks I think might do very good in 2023 and also can work as a hedge is minerals, because I think there will be a huge pressure on minerals, and I think any mineral related stocks should hold up very, very good. Especially basic minerals should be favorable. And as I said again, having a small portion of these types of stocks can enable you to do better, or let's say do less bad if markets really take a dive, because we still are in a situation where markets can just suddenly plunge very hard. As I told you, I think Nasdaq should go all the way down to 8,000 before we are finished with the bear market. And if that happens, some stock will have extremely huge falls, and then it's smart to have a portion of your portfolio in stocks that which will hold better up. In my opinion, oil, minerals are some of these stocks, along with gold. And getting back to that, oil went up $6 last week to 80, and I think it will just continue upwards, reaching the peak as the Taiwan conflict will escalate before finally bouncing down to a more normal level as recession and oil consumption and all of these things start to slow down. Gold was also up last week, $8 to 1,815. And the 10-year Treasury yield ended up almost 8% to 3.75. And it was a hard week for the tech stocks, a little bit better at Dow Jones, which ended up 0.86%. No big news. I think it will be the statistics that will define the week. But I was wrong the last 2 weeks. I expected green weeks, but as you saw, Nasdaq fell also last week. Hopefully I will be right that this will be a green week and that it will put back some of the money. And I know many of you are heavily invested into penny stocks and stocks which really be hammered, and hopefully you will see some gains because these last few days are often very kind to these kinds of stocks. We will quickly go to the technical side. We'll look at the signals that we produce at StockInvest.us and the chart and make up our mind. Will it be a green or a red week? As I said already, I think it will be a green week, but we will still do the exercise. And looking at the buy and sell signals at StockInvest.us, we can see that 21% of all stocks that we analyze give a buy signal. This number starts to become very low, and I told you I like it when it's very low, because that means it's a better chance, better risk reward for an upside. But at the same time, when it's getting low, it can fall even faster. Last week was 25, now it's 21. We are getting into a territory which I think should be a buying opportunity. Going to Nasdaq, 70%. We have been much lower when it was a really good buying opportunities. It was down at 14, so we're still a little high. But again, we see the same things. We see very low buy signals, which is indeed a good signal. Because when it was up, like it was in week 48, it was up at 38, then it was obvious that you would have a red week, as I just warned you. And for those remembering, New York Stock Exchange was 48, and I told you that that just has to create some pain for some stocks, and it really became pain for the next 2 weeks. New York Stock Exchange 25, not high, not low, somewhere in the middle, while London is 26, Tokyo 21, and Shenzhen, China only 18. And those following Chinese stocks knows that many of these have been hammered, but now China finally opened up for COVID, letting COVID go its course, hammering through the country, getting done with it, getting finished with all the lockdowns that's been plaguing China for so long time. And that means that most likely people will bet that China will get back to their normal routine. Increasing productivity, increasing demands, increasing productions. And that can bring some more life back to the Chinese stocks, which have been really hammered. And there are quite many of them at New York Stock Exchange. And the bet is that some of these will have a very nice rebounds for the next few days. But what about the chart? What do the charts say? Do the chart signal that we finally can expect some upturn? You can check the chart yourself. You can go to StockInvest.us, type in the ticker Exigam, and I recommend anyone to do this because seeing things visually is always good. And what you see is that now Nasdaq is at the very bottom of the trend. Relative strength index is very lowest, 30. It was oversold earlier in the week. And most usually, this means there will be a short-term reaction up. And as I said, the last few days of the year usually are green. So everything aligns up for this same thing. There will be resistance, huge resistance at 11,000 and later at 11,400, and this run may only be up to 11,000 before markets turn down. Hopefully it will push all the way up to the top of the trend, but there is nothing in the chart indicating that we will go into an extreme bull rally for the next, let's say, 3 to 6 weeks. Everything indicates that we will have a natural reaction up from the bottom of the trend. It could turn in the middle of the trend, which is around 11,000, or go all the way up to 11,500 before it again will have a slight downturn. But everything in the chart indicates that there will be a green week. So my bet is that there will be a green week, and now we will look at which stocks I would try to trade and which stocks I recommend that you may have a better look into. I will very soon get to the trading results for last week, but very first, none of the trading tips were sold last week. They are all still active, and that means I will not go into more stocks for this trading portfolio. But there is so many stocks which I think hold an extreme upside, and here are some of them. I think RIG Transocean Limited is one stock you should have a look into. No resistance above, meaning that this stock could go very nicely, very strong support on the downside, should reduce your risk a little bit. So RIG seems to be a good option. And then there is a stock which is more speculative, but will be either this week or next week come back with a slight rally, and that is Tesla. Tesla currently trading at $123 seems to me to be a good option. Will that very, very strong buy be around 100? Will it have a huge fall down to 100? I cannot say. But Tesla is for sure a stock you should keep an eye on. And only for a short-term gamble where it has a natural reaction up, which I think, in my personal opinion, will be if you're able to pick any stocks around 100, 121. I think it's a fair chance that you can do a very nice trade upwards to 150. And very soon there should also be a longer term buying opportunity in Tesla. And you can have a look at them all over because there are so many of them. It's Amazon. Even Disney opens up for a 10-15% buying opportunity, and the list just goes on. What I recommend you to do is have a quick look at charts. I would use relative strength index. I would look at stocks which have very low relative strength index. Check if they have support below. Look at accumulated volume. It's the gray bars on the right hand side, because you should see some of them below. That will reduce your risk, and you should see a little or a gap up where there is none. If you go and look at, for instance, a company like Disney, you see there is no resistance up to $90, but right now it's 88, so it's not so much as you can see, for instance, in RIG or other companies. If you do this exercise, will enable you to do more, but most of these stocks says the same thing. They are only in for a very short rally. They do not say no long-term buying opportunities. Let's get back to last week's trading week, because last week I opened 5 positions. I had 2 open, I opened 3 more, and told you that was a high gamble, and I was not sure that it would all be green. Anyway, it went somewhat okay, but let's start on the top. On the top we have Stromberg, which we had since week 34. It's the only stock we ever bought in this traded portfolio without a stop loss, simply because it's extremely volatile. It's a shitty penny stock with the right segment, with good financials, which I think will do very good, but so far just been hammered and hammered. Will this be the week that Zomedica do some redemption? I do not know. Right now, it's a huge loss in the stock. But thankfully, because more or less every week has been green since we started this year, we have a lot of profit to take from. But in general, you should never let the stock fall as much as I have done in Zomedica, me even breaking my own rules. But I told you this stocks, when it first move, it will go so very fast. Does this mean that Zomedica is a buying candidate? Yes, I think so. It's highly risk, it's highly speculative, but I think this stock is currently very, very undervalued with a huge upside. We will see. This week for sure will be a week that will define Zomedica. As I think most stocks will go up. Then we should see Zomedica go up as well. And at some point, anyway, we'll have to consider to close the trade and get it out. Because right now, it's the worst trade ever made in this series. But I think we should be able to regain some of the losses, if not even bring it back to profit. We will have to see. Then it was Chevron bought in week 49 at $168. As I told you, then I bought Chevron because I thought Chevron could hold very good in the market and saw an upside in oil. Currently trading at 177.60, mean that it's up 5.37%. And we just like that. I think it will continue up, still stays in the portfolio, and I believe that it will stay quite some time, as I don't see oil to fall very hard very soon. More interesting is the last week's trade because these were much more speculative. I told you we would up the game, we would take a little bit more chances, and we went into stocks which were somewhat risky. Let's start with Meta, maybe the most or the less risky of these stocks. Got in at 115.29, currently at 118, up 2.39%. So it's moving in the right direction. I really think that we would see Meta climb possibly all the way up to 150. Personally, I'm trying to gain around 130. That was the target, and I think it is very possible to get there, maybe even this week. Then there was SIM, and SIM turned out to be a good choice. Got in SIM at $16.66, currently at $17.51, up 5.1%. Still stays open, and I think SIM will continue upwards. But Exigam, I told you that high risk trade. Put on a big stop loss on it. I got in at 0 or 10.5 cents. But it was struggling all week. For a little while it saw like it was going to be good. But then it was just a ugly week all week, ending at 9.1 cents or down 13%. And the total of the portfolio with a slow week of Zomedica and Exigam, but good week for Chevron, SIM, and Meta, made it overall more or less like the indexes. I was hoping for a strong week, but I think this week actually will be a very good week for all the stocks that currently are opening. Does that mean that I think you should buy Meta? I think Meta has some upside. I just told you. Do I think SIM has some more upside? Yes, I think SIM has some more upside. And you can even try Exigam. Very speculative. You have to be quick in and out. And that was all I had for this very last podcast for 2022. I hope you will have a very last part of the Christmas and a good start on the new year. And we will speak in just a week when I will be back with the first podcast for 2023.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for